Hey, this is Noble Woods. Welcome back. This is video number 4 in my series of 30. I just want to give you tips, technical tools, techniques. I want to give you some gems, give you some things that nobody's really breaking down in really simple short videos. Why? Because I want to get you excited. I want to invite you to invest in yourself by joining one of these two classes. If you've never traded, start with options. Options is powerful. It's life-changing. We should have learned how to trade options as high school kids, but we didn't. Futures is more for my advice, more for people who understand trading, have been trading, right? You're successful. You're probably already making 6-7 figures. You're doing well, right? You're okay with math, right? You're okay with processes, discipline. It's a little bit more serious. Options is for everybody. It is. Options is powerful. So what I want to do today is I want to show you something. I want to show you something that a lot of people struggle with. There's something called overtrading. So what is overtrading? It is what it sounds like. You're just taking too many trades. You're so eager to make money, right? Sometimes there is no trade to take. So here's the big question for today. When should you simply not trade? When do you just sit on your hands? You just relax. You just watch some TV. You go do something else because there's nothing to do. That particular stock, whether we're talking about the 1 minute super fast day trading, 5 minute, 30 minute, the day, the month, or even the week. And trust me when I tell you, there are some stocks that will range going nowhere for an entire year, right? So this concept of volatility and knowing when not to trade, it can save you a lot of money, a hell of a lot of money, if you know, right, when to actually not trade. So here's a question. Here's a second question. What tells you when not to take a trade? And do you know not to take a trade? Can you recognize when we don't have the volatility to take a trade in seconds? What indicator tells you that? What tools, right? Most people don't know. So I had to build that into my system. Why? Because I always would get questions from people like, Noble, I would love to trade futures or options. You know, I want to make just $1,000 a day. If I could just make $1,000 a day, brother. Right, I'm like, yeah, everybody wants to make $1,000 a day, right? But very few people are doing it. But for some reason, everybody still has this $1,000 is like the thing, right? But why are you assuming that the market is even going to give you a trade every day? It's not. It's really not. So I want to show you better than tell you. The stock you're looking at is Amazon. These are 30-minute candles. Intraday, right? And so there's an indicator down at the bottom. It's really powerful. I won't even tell you the name because you probably look it up thinking you can master it really quick. You can't. It literally takes some serious time to really understand what it's doing and why it's doing what it's doing. But it's giving you these little red dots. And just like a traffic sign, if you get the red dots, that means you don't have the volatility. Don't take a trade, just relax. I teach you in class how to actually use it to take a trade. You kind of can sneak in the market a little bit early, but that requires some skills, a framework to make sure you know how to do it. At its most simplest though, if I was to trade Amazon tomorrow and I wake up and I see those red dots, I'm trading something else. There's nothing to do. The chances that you're going to get a trending move are very low. It's more probable that you're actually going to lose than make money. So why would you trade? Because you don't know what this indicator is and you don't have a system that tells you when not to take a trade, as well as it is able to tell you when to take a trade. Sometimes not trading really is the best thing you can do. So let me show you one last thing. If I was to zoom out of this day, the mathematical reason is that we didn't have volatility. The more practical reason is this was Amazon the day before earnings. Oh, it makes sense now. That's why nobody was trading. That's why the range for that day was really tight. Nobody was trading. Volatility was low. Why? Because of earnings. Everybody was waiting on earnings. What's the numbers? What are the numbers? What is Amazon going to do? Will they beat earnings or will they, all right, what is the market going to think about earnings? So that's the practical reason. But even if you just, let's say you forgot or you didn't know, right? You jumping around, you're trading all these different stocks. You just were trading Amazon on a day and you didn't realize that it was earnings that day. Would your system still be able to have told you not to take a trade? Mine would. That's why I stand on it. That's why I'm doing these classes. I want to help more people get really, really solid. And for my folks who love systems and processes, you're going to love class. You really are. You really are. So anyway, man, thanks for watching. This is video number 4. I'm going to give you another video tomorrow, right? 5 in a row. And then next week, you'll get another 5. We're going to do 30 all the way leading up until September 25th. I just wanted to have some fun, wanted to share, wanted to, teach. I love teaching, as you probably can tell. So thanks for watching. Share this video with somebody that you know and that you love. And hopefully I'll see you in class on September 25th for options or October 23rd for futures. Thanks for watching. Peace.